Hey, it's Tom Miller again here with EXP Realty with my friend Jebb Rich from Fidelity Bank, and today we're going to talk about pre-approval on a mortgage and why it's important to do that. Why it's important to do that before you start shopping for a home, and basically how you do that. So, Jebb, I don't like to show a house until somebody's been pre-approved, because we've talked about the last thing I want to have happen is somebody fall in love with a home they can't buy. Right. And so we want to understand what that person can afford. Talk to me about that process, what it looks like, what people need to be thinking about when they're thinking about buying a home, particularly thinking about a first-time home buyer that's never done this before.
Well, we have a pre-approval process that's super simple and super easy to follow. Our online application is really the starting point. Allows you to go in and put pertinent information, your job, income, assets, complete an application to get us started and moving in the right direction. And as Tom mentioned, really the pre-approval gives you a roadmap of not only affordability, but if you have any issues from a credit standpoint, we can give you some working points to correct those. So when you are ready to buy, we can get your credit scores, your overall credit profile as good as we possibly can.
Yeah. And why is that important?
Well, the pricing is really determined on credit scores.
Yeah.
So there are products that that we can use for lower credit scores, but really the top tier pricing or the conventional loan pricing is going to require us to have a credit score that's as high as we can get.
Yeah. And the higher the better, basically.
True. Yeah.
I think the other thing on that too is I know you've helped folks over the years put a plan together to get their credit up. A lot of times it can be pretty simple to get your credit score to jump up quite a bit.
Super simple. A lot of it revolves around the usage of revolving credit.
Yep.
And credit cards. If we can adjust those balances, paying them down or increasing the lines of credit.
Yep.
The available balance.
Yeah.
Many times we can move credit scores 30, 40, 50 points.
Yeah. So let's get to the heart of pre-approval. I've been talking to somebody, I sent them to you to get pre-approved, or you've been talking to somebody and they want to get pre-approved. What are the things they need to have that conversation with you to get that going?
Really, we need the last 2 years W-2s.
Okay.
Most recent paycheck stub.
Yep.
From your current employer.
And when you say W-2s, the slips or just their tax return?
I would like both if we can get them, but really just the W-2, the slip that you get at the end of the year or beginning of the next year for the prior year, will get us. It allows me to average or look at income over a 2-year period.
Okay, great.
And then from an asset standpoint, last 2 months bank statements, checking and savings. And then any other assets that you have, we most likely aren't going to use those as a down payment. And I'm thinking of 401ks or retirement type.
Yep.
But underwriters love to see assets, rainy day funds.
Yep.
But we want to get a clear picture of an asset.
Okay.
Yeah.
Awesome. Great. Well, if you're thinking about buying a home, now's the time to have that conversation with Jebb. I always like to tell folks it's never too soon to have that conversation and get that pre-approval going, because you never know when that house you want is going to pop up. You never know when your circumstances are going to change. And if you're even thinking about it, now's the time to get the information. So again, Jebb's information will be either in the comments or in the description on this video. So be sure to give Jebb a call when you have mortgage questions.
Thanks, Tom.
Yeah, thank you.
Mm-hmm.